Hi, I'm Garth Drinkwater from Small Business CGT Concession Specialists. In this video, I'm going to talk to you about the interaction between the Small Business CGT Concessions and marriage breakdowns. Particularly, I'm going to provide you with an overview of the interaction, and I'll talk to you about the modifications to the active asset test and the Small Business 15-year exemption, and the circumstances in which a taxpayer may or may not want to choose for the modifications to apply. I'll start with an overview of the interaction. When a marriage breaks down, there would usually be a financial settlement involving the transfer of assets between the parties to the marriage, including transfers from their companies or trusts. This would usually be done under an automatic capital gains tax rollover. In broad terms, where the automatic capital gains tax rollover applies, the transferor disregards any capital gain or loss on the transfer of the asset. What happens for the transferee depends on whether the asset was a pre- or post-CGT asset in the hands of the transferor. If the asset was a pre-CGT asset in the hands of the transferor, then the transferee inherits the pre-CGT status of the asset. However, if the asset was a post-CGT asset in the hands of the transferor, then the transferee inherits the transferor's tax cost base in the asset. In this circumstance, the transferee's acquisition date for the asset is usually when the marriage breakdown financial settlement is executed. There is an extension to this acquisition date for the purpose of determining whether a subsequent capital gain might qualify as a discount capital gain in respect of the minimum 12-month ownership requirement. But that extension does not apply for the purposes of the Small Business CGT concessions. So what happens if a taxpayer wants to apply the Small Business CGT concessions to a sale of a post-CGT asset that they acquired under a marriage breakdown financial settlement with an automatic capital gain tax rollover? Well, the normal requirements for the Small Business CGT concessions still need to be satisfied, but there are modifications for the active asset test and the Small Business 15-year exemption. The normal requirements, the active asset test and the Small Business 15-year exemption are all covered in separate videos, so here I'll just talk about the modifications. The modifications are designed to assist the taxpayer to access the Small Business CGT concessions where they otherwise might not be able to due to the post-CGT asset having an acquisition date set when the marriage breakdown financial settlement was executed. I've just provided you with an overview of the interaction. I'll now talk about the modifications to the active asset test and the Small Business 15-year exemption. Firstly, I should say that the modifications are a choice, and the taxpayer does not have to choose to apply them. And in certain circumstances, they may not want to choose to apply them. I'll talk through that later. The modifications can be chosen to apply where the taxpayer acquired the asset under a marriage breakdown automatic capital gains tax rollover. If the modifications are chosen, then the taxpayer applies the active asset test as if 1. The taxpayer had acquired the asset when the transferor acquired the asset. 2. The asset had been an active asset of the taxpayers at all times when the asset was an active asset of the transferor. And 3. The asset had not been an active asset of the taxpayers at all times when the asset was not an active asset of the transferor. In addition, if the modifications are chosen, then the taxpayer applies the Small Business 15-year exemption as if the taxpayer had acquired the asset when the transferor acquired the asset. The effect of these modifications is that the taxpayer inherits the transferor's acquisition date and active asset history. I've just talked about the modifications to the active asset test and the Small Business 15-year exemption. I'll now talk about the circumstances in which a taxpayer may or may not want to choose for the modifications to apply. The taxpayer may want to choose for the modifications to apply where 1. The taxpayer would fail the active asset test but for the modifications, or 2. The Small Business 15-year exemption would not be available but for the modifications, and the modifications would not cause the taxpayer to fail the active asset test. However, the taxpayer may not want to choose for the modifications to apply, where 1. The taxpayer would satisfy the active asset test without the modifications and the Small Business 15-year exemption would be available without the modifications, or 2. The taxpayer would satisfy the active asset test without the modifications and the taxpayer does not want to access the Small Business 15-year exemption. And that's it. That's the interaction between the Small Business CGT concessions and marriage breakdowns. If you would like to know more or get in contact, head on over to our website.